Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We have Rachel Dasher with us in the chat. We welcome her. We like to say welcome to the month of December. I started my morning off by scraping ice off my windshield. Yeah, it's that time of the year. And just real quick, Kevin, Dragon Rider, Josh, Gary, Fayez, Kelly, and many others, welcome to all. Now just remember, this class is being recorded, okay? So by the way, this is going to be a class that you really want to kind of bookmark, bookmark it. Go back and really review the first 15 minutes of what we talked about. It is really a template for really building a portfolio, example given, and also kind of understanding the bigger picture. Now, just real quick before we hop right in, remember you could follow Rachel or myself on X. There's my handle. We post educational examples and also announcements as well. Also remember that when we talk about the information is provided for general informational purposes only, should not be considered an individualized recommendation. Also understand that when we talk about options carry a high level of risk and are not suitable for all investors. Also understand that when we talk about examples, they will be done in the paper money software application for educational purposes only. When we also bring up investing, remember investing involves risk, including loss of principal, and it also could be that unrealized gains where you give money. That's not nice, but that's important to understand there as well. Now, remember today, I want to kind of talk about maybe something a little different. I've been reading your comments in the surveys. Thank you for those. Today's session in the first 15 minutes is really to address some of the comments that I received. So if you were to tell someone, if you were to say the word investing to someone, I mean, what type of investing, right? I mean, where the second question from that is, where do you even start when you say the word investing? The other question might be, how do I actually understand and evaluate trends? Okay. Now, as we kind of go through this, I want you to listen and watch, and I want you to rewatch. Okay, that's the big thing is rewatch. And it's something I want you to imagine if I gave you a marker with a whiteboard that you could go up and teach and preach back to us the technical analysis gospel. Oh, okay, leave that last word off, but some of you can really get into it. Gospel just means that you really get into it. Now, also remember that I want to kind of show you the bigger picture of how we kind of look at things, but also I want us to kind of think about strategy as well. Now, one thing I want to kind of do is pull this back. I'm going to just bring up just a quick whiteboard, okay? Now, don't worry, as we go through this whiteboard, I'm going to show tickers and examples of demonstration trades and so on, but I kind of want to kind of use this as a quick template. By the way, we're coming into what, the last 3 weeks of the year, etc. And then we reset the portfolio again. And so I want to kind of just mention this. Now, just 2 weeks ago, I'm going to label this as really trend one. Okay. Now I want to kind of just label this just real quick. Trend one. Okay. And then we actually go trend two. And then you actually go trend three. I'll tell you what these are in just a second and why they matter and why are we talking about this today. And we're going to go trend four. And in our mind, we're also going to be thinking about trend 5, T5. I'm just writing T for trend. And then you shift back into trend 1. Now, trend 1, when I think of trend 1, in my mind, I'm thinking sell-off, okay? And when I took that vacation about 2 weeks ago, you're going to see that, it was just sell-off. We'll talk about that sell-off in just a second. We're talking big picture. 2, when we actually talk about this, when we think 2, we think about reentry. We kind of saw a lot of this last week, okay? There was a lot of reentry setups. We'll highlight this. A lot of reentries, okay? And also with that, reentries, when we also look at trend 3, this is what we call bull flag bill, okay? Bull flag bill. And everything looks like a flag. Again, we're going to highlight that as well. 4, we're just going to call this triangle. Okay, triangle. Everything looks like a triangle. Triangle bill. Now that could actually be ascending triangles, symmetrical triangles, pennants, all of the above. And 5 is really the snap of momentum. Okay, snap, Momo. Momo for momentum. This is really the big picture what's going on. So if you were to ask someone, when do you tend to do the best with your investing? Oh, simple. 3 and 4. Okay. At the earliest, 2 and 3. If you ask someone the question, when do you tend to be doing the worst with your investing or actually having a pull down in the account balance? It's easy. 5 and 1. Okay. If you ever kind of ask someone, hey, have you ever been in a situation where your portfolio is just going sideways? Exactly. What type of trend is that? For sure, number 4. Okay. So you can kind of pinpoint. Now, by the way, when we look at this, we're really using the SPX, the S&P 500. That is the proxy to really gauge the trend. If we're talking about the market, we can look at sectors, industry groups, and stocks as well. But what's happening in the SPX will probably tell us what's happening with many, not all, many stocks. Now, let's kind of take this. So we talked about this bigger picture, okay? And I want to kind of break these down. Now, by the way, if you were, let's say, in a doctorate program, you could really write a PhD paper on what we're talking about in terms of the information, studies, correlations, causations, many different things. There's way more interest in many of those PhD papers. Now, if we take a look at this, I want to kind of break this down for just a second. Remember, the point of this is we want to have an idea of the big picture, what's going on, but then actually have confidence with what we're seeing and having tools and indicators to help us trade those different types of trends. Problem is, if you don't see the big picture, if you don't know what to really expect, you just kind of don't really have a whole lot of confidence to ride any type of trend, short-term, intermediate, or long-term, okay? Now, the biggest actually thing is when we talk about trend 1, quickly, well, I'm just going to write here, this is when the price is above the 10, price below. Go back right there. Price below the 10 and the 30. And remember, if those moving averages are acting as resistance, that's not kind, okay? Now, when the price is below, now, by the way, this is also when we had, that's a key word, we had a crossover. And I'm going to label it as an X. When I say an X, I am saying a moving average crossover. Had past tense. It already happened. And when the price actually goes up, the price, if it goes up, it only goes up 1, 2, 3 days. And what you're going to notice is the 10, what? It acts as resistance. And, oh man, we're going to see multiple examples of this. That's not very nice, okay? Now, the biggest actually thing is when we're in trend 1, this is when the VIX, and we saw this less than 2 weeks ago, the VIX tends to be rising or peaking. You're going to tend to actually see in this case, really income, I for income, value, and then probably growth. Income will probably be the strongest focus because people are trying to hold on to things that maybe don't move as much. Value, yes, but they're probably still falling. And growth, yeah, those are the ones that tend to be falling the most as well. Remember, right here, this is when some investors' fear is sky high. But when the fear is high, this is also at the same time when the opportunity tends to be high as well. Because if you get fear high, you tend to actually get what? Prices low. Now, very important about this as well, this T1, is we wanted to really see the prices down near, okay, the horizontal support. When I say horizontal support, I'm talking about in the last 1 to 3 months, okay? So if we look back on the chart, has the prices fallen down to HX, the horizontal support of the last 1 to 3 months? Can you see it? We're also going to be getting some indicators like MACD divergence, okay? MACD divergence. That tends to really take about 1 to 2 weeks to develop. What does that probably tell us? Well, it takes some time of the market selling off or the stock selling off to actually get a divergence. The biggest thing about this is if we're going to get a decent pullback, we need the price to go down to the horizontal support, HS, And that horizontal support can be seen over the last 1 to 3 months. If it's fallen down to a horizontal support, you tend to get the bullish MACD divergence, which is probably the last 1 to 2 to 3 weeks, etc. Now, the biggest actually thing is, if we're talking about oscillators, things like stochastics, RSI, CCI, they're going to be in the oversold condition. What a surprise. Now, if I now shift this, right? And this is kind of like, when I was kind of out of the office a little bit, prices are coming down. If we now move into 2, now let's kind of remind yourself, what was number 1 again? We labeled number 1 as the sell-off, okay? Now if we talk about, for example, this re-entries, okay? Well, what is that re-entries? Well, this is when that price gets above the 10. Now, it's a 10-day moving average, okay? The price gets above the 10-day moving average. I'm going to also label this as this is a small window. You're going to see in some examples when we get trend 2, it doesn't stay trend 2 for very long. Does anybody know why? Why doesn't it say trend 2 for very long? Well, because people are trying to get back in. If people are trying to hurry and get back in, well, what tends to happen is people snap up the stocks they want to actually, or buy the stocks they want to buy, and all of a sudden it's not in that condition anymore. The biggest thing in trend 2, prices above the 10, not the 30, okay? So this is the restarting of bullish momentum. Now, remember I said you could kind of study this over years? This is when you're going to start to see DBOs, which is diagonal breakouts. Diagonal breakouts would be made, that resistance is made from lower highs. If you've been making lower highs, if you start to break out, you're now making higher highs. This is when you get the whole moving average crossovers or crossovers in general, okay? This is when you get the whole moving average crossovers or crossovers in general. This is when you get the VIX to start falling. Now think about strategies here for just a second. Wait, if the stock's starting to go up, breakout trade, moving average crossover, you also in essence get the VIX to start to fall. Think strategy here. Now, this is when you tend to really see that growth tends to outperform value, and it actually tends to outperform income. Now, when we say growth, we are talking about technology, discretionary, communication, energy, and material. When we say things that tend to be a little bit more value-ish, we're really saying more transports, industrial, financial. When we say income, we're really actually saying more, let's say, utilities, staples, healthcare, non-biotech, and real estate. That's not changed, okay? Now, in that trend too, remember I said it's a small window. All of a sudden, by the way, this is kind of where the market is right now, these trend 3s, what do we call that trend 3? Well, trend 3 was bull flagville. Now, I'm not going to lie, okay? I wouldn't lie anyway. But this is when if we're talking about like things are moving and my gosh, could this just keep going for another 30, 60 days? And many investors wouldn't mind. It's in trend 3. You're making a higher highs, higher lows. This is when the price is right above that 10 and 20 or 30 period moving average. I'm going to write 30 because when we talk about trend, that's kind of the definition we're using. The 10 to 30-day moving average. The 10-day exponential, the 30-day simple. So if the price is above the 10-day exponential and the 30-day simple, there's momentum and trend. If the price is above the 10-day moving average tends to be it tends to be the support level, okay? Now, when we actually get, for example, that in this situation, we tend to have shallow pullbacks. Now, by the way, think of like what the market's doing today. Yeah, but the market's down. That doesn't matter. Okay, the market down doesn't tell us that it's if it's down 200 points on the Dow. You got to remember the Dow index is like at 49,000. Okay, so the big thing is if we get shallow pullbacks, I'm going to write PBs. Okay, pullbacks 1, 2, 3 days. The question is does the price stay up above, fill in the blank? Yes, that's correct. The 10. And this is when you tend to have what we call those coholds. Okay. You also tend to, for example, have the close higher gaps, CHG, okay, as well. This is also when you start to, at the same time, let me go back to one thing that I did not write, shame on me. Down here in trend 2, this is when we start to see the breakouts. And those breakouts are really on the 10-day time frame. 10-day time frame. TF. 10-day time frame. Why not 20? Well, because it hasn't gone up long enough. If we actually said, well, if they go into trend 3 and the price is moving to the upside, we can now get the breakouts on what time frame. Well, if it keeps going up, it'd probably be a 20-day time frame. That we probably get a 20-day time frame breakout. And so what does that tell us? There's just more confirmation of the upward trend. Now, if we take a look at this, okay, I just want to make sure I didn't miss anything. The biggest actually thing in this case, the VIX, is probably flat to pushing down. Now, real quick here, okay? When we went back to trend 4, we labeled that as Triangleville. Now, one of the questions, now hold on, I got a question that came in. I wrote it down, but let me write this down first. Triangleville. Everything looks like an ascending triangle, a symmetrical triangle. You get like maybe a shorter term pennant pattern, something like that. It could also be maybe like a bull flat where you get a horizontal support. And that's it's almost running parallel horizontally to the resistance. Okay. And in that trend 4, that's when the price, it's above the 10, the 30. Okay. But the key word is it's up near, I'm going to write R, near resistance. Okay. Now, so if that stock, if the price is above the 10 and the 30, the key differentiation, it's up near the resistance. Now, the question that came in, okay, and it's a good question, and if it wasn't, I would just tell Ray, this is a bad question. Let's think of a better question. I'm just joking with Ray. I got it. He's across the pond right now. Now, the big actually thing is this, hello, JB. I always look at resistance and hesitate to buy. Is my fears unfounded? Well, I would throw the question back out to Ray. Ray, so it depends upon what type of resistance we have. If we are in trend 4 and we have an ascending triangle, which means we had a trend going into the consolidation. We have a symmetrical triangle that was upward trending before we got into the consolidation. We have a symmetrical triangle. We have a pennant pattern, which had an uptrend before the consolidation, and we had an uptrend before we got into the bull flat. Is that maybe to have fear unfounded and so scared of resistance? And I would push back and say a lot of times, yeah, because just because we have consolidation doesn't necessarily mean it's going to fall apart. That resistance is just the shorter term consolidation, okay? Now, especially if we're still getting at this time the growth areas to perform stronger than value and income, could maybe that resistance become like Jello, something that we can just poke at and knock over? Yeah, the answer is yeah. And if it actually does that, it might just go back into a trend 3 condition. Wait, why is that? Well, the difference between trend 3 and trend 4 was resistance. If you break out after ascending triangle, if you break out after consolidation, you break out after a pennant, you break out after a bull flat, you've now shifted back into trend 3, and that ain't a bad thing. That just means that you're more, and by the way, trend 4, you think about this also like these are continuation patterns. Continuation patterns. The other thing that we would actually be looking for is keep an eye on the VIX, and do we see that outperformance of income, okay, which is utility staples, healthcare, non-biotech, and real estate. And that last one, 5, just real quick, before we look at examples, trend 5 is just the opposite of 2. This is when we actually see, what do we call it, trend 5? Trend 5 was the snap of momentum. That ain't fun. It was fun. But all of a sudden, the price is now below the 10. The 10 starts to act as resistance. Boo. This is when we see the price go up for maybe 1, 2, 3 days, and the 10 is acting as resistance. Boo. And this is when we get the moving average cross, bullish or bearish. Boo. Bearish. Okay? And now the biggest actually thing is this is when you see the diagonal, DBO, diagonal break. Well, let's label it like this. We'll label it as the trend line breaks. Okay? The trend line breaks. Now, here's the question I have. I got a couple questions. We're going to come into some trades, okay? So when I'm thinking about investing, I've been investing for 30 years. I've seen lots of things, okay? And when I'm thinking about investing, this is really the picture that's going off my head as far as the some of these patterns. And I want to kind of come into some of these questions that you have after we look at this, okay? And then we're gonna put some trades together, okay? Now, I want to kind of throw in some questions. And the questions are, James, wonder if you get, for example, let's say this is a question, okay? Wonder if you get, let's say, trend 1 and trend 2, okay? Trend 3, let me say this. So if we get, let's say, trend 1 and trend 2, and they just don't last very long, and it always tends to be a lot of time and like trend 3, and we're going to see examples of this. Well, if the trend 1 and trend 2, and let me flip this because I see some questions here. If we're trend 1 and 2 if we tend to be in those pockets of time, and I'm going to show you what I mean by this. And this trend 3, it doesn't last very long. What does this look like? What am I saying? Well, let me show you exactly what I'm saying. So when we're in trend 1, okay, and when we're in trend 1, trend 2, and trend 3 on a primary basis, and we can't even get up to trend 4 and 5. Let me show you what I mean by this question comment. Example given, you're going to see that CRM. Let me show you a couple so we can get comfortable. When you look at CRM, and if you don't have this chart, here is the script for this. What does this tell us about the trend and or momentum? Now remember, the color of the candles is signifying what the type of the trend is. You're also going to see that down below, it plots for us really what is the trend. You're going to see on the right-hand side, 1, 2, 3, 4, 5. Okay? Now, the reason why we created this is I hate it when you ask 100 people what type of the trend it is, and sometimes you get about 74 different answers. But wonder if you actually categorize it. Wonder if you actually, and by the way, wonder if you actually ask the same person the same question, and like on a day-over-day, week-over-week basis, the answers they were giving were different. Why is that? Well, because the person's emotions changes. Okay, their positions might change, and it's smearing the technical analysis, and that is that's what's making it hard to be consistent when there is no consistency of categorization of types of trends. Now, in this example, when you look at the CRM, it stayed in trend 1 for a long time. What does that tell us? Downtrend. When it did go up to trend 2, it didn't really go up there it went up there for about a week or so, but it couldn't go up there for much after that before it fell back down. It went to trend 3 for 4 days, fell back down. Went up to trend 4 for 3 days, fell back down. So where are we spending the bulk majority of the time? Boy, we're living in the basement of that trend 1. What does that tell us about trend? Probably down. What does it tell us about momentum? Probably that the price is making lower highs. Now, example given, when you look at, let's say, this last one, this MSTR, what does this tell us if we're spending the bulk majority of the time in trend 1? Downtrend, downtrend, downtrend. Now, remember we talked about the 10-period moving average? If we're below the 10-period moving average and the 30, one of the most painful, painful, and I literally, it's so painful. You see these wrinkles right here underneath my eyes? They were created from holding on to stocks below the 10-period moving average. Oh, it's not fun. Because you're saying, well, it's going to come back up. Well, sometimes it doesn't come back up. And that blue line becomes like a thick sheet of ice where all of a sudden the bulls are outnumbered by the bears, and the bears are just, using the stock as a punching bag. Now, not literally, of course, but there's more sellers than buyers, causing the price to go lower. And this becomes one of the most painful things in the stock market. My gosh. Okay, now, let's take the flip of this. Wonder if this stock, for example, was spending a bulk majority of the time in that trend 3-4 condition. Hallelujah. Okay, well, in this case, where do we spend the majority of the time? Oh, well, a lot of times it's been trend, we're in that trend 3. Okay, now if we're in that trend 3 condition, that tells us a lot of times we're above the 10, 30 period moving average. Notice here, when we did fall down to that one area or zone, how long did we stay down there? That dot right there is for 1 day. The second dot right there is for 2 days. I feel bad for the people who aren't watching this. You know why I know that? Because they don't have confidence as far as what they're reading on the trend. You don't have confidence in what you're reading on the trend, you're probably not going to likely trade the trend. You don't likely trade the trend, you're probably not moving the accounts higher. Over time, not all trades are profitable, but the biggest actually thing without this, you're going to probably be on the struggle bus. That's why we created it, okay? Now, the biggest actually thing is when it did go trend 5, yes, it fell down, but it supported itself in trend 3. You're going to see the exact same thing in Apple right here. Same exact thing. When we fell down to trend 1, only 4 days, push right back up. Trend 1 for 1 day, snap right back up. This is showing a picture of bullish sentiment, okay? Now, you want to kind of see an example of, let's say, something else. What happens if, let's say, example given, let's say, like on Johnson & Johnson. This is another example. When we got into trend 5, yes, it fell back down, but it fell down near a moving average, supported itself, stayed in 3. When it did fall down a little bit more, notice the red candles match the oscillator at the bottom. 3 days. What did it do? It pushed itself back up. What did it do recently? 5 days down, but then pushed itself back up. So what you're now going to notice is the color of the candles, trend 4, trend 5, the purple ones, trend 1, the red ones. And then I want you to notice something here, okay? When we got this light green color candle, now this is a pop quiz of what we talked about. Why doesn't that light green candle last for very long? Why? Well, because people that know how to invest are buying. Okay, people that know how to trade, they're buying. Do they know that it's going to go up? No, but they finally got their signal. Price above the short-term moving average, which could also be what we called a what? Well, a diagonal breakout. And that diagonal breakout, if we went back, if they start to see the price above the 10-day moving average, they're getting in that diagonal breakout, the whole moving average cross, or just a classic moving average cross. That's why they're getting in, okay? Now, the question now becomes is when you see something like this is where do you start? Well, I'll tell you where we start. Now what we're going to do is we're going to fast fire. We got 17 minutes. When we look at, let's say, the SPX, we're going to go to the SPX on the chart. Now, one thing we could do is say, what's the color of the candle? Color of the candle is dark green. Dark green represents trend 3. You look down at the bottom in the oscillator and you're going to see how it's tracking. It is trend 3. Now, if the S&P 500 is showing trend 3, what do you think most sectors are showing? Why do we start with the S&P 500? We start with the S&P 500 because it's a broad view of the sectors, okay? And it is top heavy. It's not equally weighted. But the big thing is it gives us it's not just heavily based just on technology. It's more really kind of giving us a broad view of liquid stocks and sectors. Now, if I pulled up, let's say, sectors and said, hey, could you pull this up sectors? If we looked at this, and by the way, you might be asking the question, well, how could I look at a list of stocks and see what the type of the trend is? I don't know where you've been, but it's always been there, okay? It shows a trend right there column, and it will also show us a trend weekly column. So if you say, James, I'm shorter term to intermediate, you're probably using trend. If you say, James, I'm more of an intermediate to longer term, you're probably using more trend weekly. More of this story is when you look at these sectors, trend 3, stocks trend 3, communications 3, financials 3, industrials 2, 3, and so on, and trend 2. Bulk majority is when we looked at the one ticker, SPX, it pretty much told us what we were probably going to find. What I do want you to notice when you take a look at the weekly percent, remember I said if we get the market to go up to the upside, the S&P 500 to go up, what is that probably going to tell us in terms of, let's say, and by the way, I don't want to just act like I said this and I really didn't say this. If we get a snap back to the upside, it's normally going to be growth outpacing value, value outpacing income. Growth was tech, discretionaries, semiconductors, communications, energy, and materials. Value sometimes could actually be transports, industrials, financials, and income would be utilities, staples, healthcare, non-biotech, and real estate. And lo and behold, when you look at statistical one-week returns, you're going to see that more than not, the ones that went up the highest percent was right on the diagram. The moral of this story is we see patterns that happen over time. It's not that the utilities and the real estate and the healthcare were horrible and the staples, they just didn't go up as much as the other ones. Okay? All right. Now, let's show this. Okay? So when I pull this up, one thing I want to do just real quick is kind of isolate some of these sectors just real quick, and then we're going to look at example trades. Now, when I look at these example trades, I'm going to go, now, by the way, if you said, James, I don't have this chart. I want that chart and put it in my Christmas stocking, okay? And what you're now going to notice is that right there is the link to this chart. If you say, I don't even know how to put it on there, go to the top right setup, open shared item, click, and you're now going to see there's the script for the trend chart, or the chart that's going to have the trend candlesticks and that oscillator at the bottom. Now, if I click on preview and then import that, you're now going to see that little chart pulls up and it looks like the one behind us, okay? Now, if you said, well, James, I want that trend on the market watch. Now we're talking, okay? Trend, go to customize. Let me share this with you. Right click on that for me, customize. Now, let's go right click, edit formula. I'm just getting the code for you. If you said, I want that trend column, that way I can have a list of stocks, pull it up. Now, remember, when you look at this trend column, you need a list of less than 50 stocks, typically. So that way it can actually screen through those. If I take, let's say, a Dow 30 list, should it be able to actually run through all those? It should be, okay? If I pull up the Russell 2000, S&P 100, 500, it's not going to be able to load all those. The list needs to be something probably 50 stocks or less, okay? This right here is for the market watch, the trend column. Now, what I want to do is focus on a couple stocks. Let me show sectors first that might be trying to get a little push. Now, when you look at, let's say, transports, does this look bullish or bearish to you? Does it look bullish or bearish? Remember, we talked about airlines last week. Remember we made that sample list? Kind of looks like, now remember, if we said what type of trend is this? Remember I made that comment like if we're in trend 4, that's probably when we're going to see what? Well, we're probably going to see what? Well, ascending triangles, symmetrical triangles, pennants, fleegs, okay? The biggest thing is if we get the price to break out, you go from being in a trend 4 condition to shifting back into trend 3. With that comment, let's go back and look at this. No, okay, so here was your prior high. You were in 4 until what? Until it poked through resistance, and it now is shifted back into 3. Because why? You cleared the resistance level. So Ray, we're going to kind of say that, you know, you might kind of have a fresh new perspective on resistance, provided that it was uptrending before the ascending triangle, symmetrical pennant, or bull flat. Now, I'm going to kind of pull up some stocks that we're going to kind of take a look at. I just want to pull up transports. When you also look at, let's say, the basic materials, remember, diagonal breakout, right? Kind of was in something making lower lows and lower highs, breakout. Now, we talked about this with Kevin on Friday. Gold, silver. Did we mention anything else? Copper. If you pull up copper, did copper get a little push here today? Yeah, it actually did get above the area of resistance. It would always like it higher, but we could say that every day. But we would also include steel, okay? So basic materials getting a little push. Now, I want to kind of pull up just a couple stocks. I'm going to use the example given of Caterpillar first. Now, what you're now going to notice on Caterpillar, it really kind of has something where we've gone to the upside. Most of the time, the 10-period moving average is acting like a little area of support. I'm going to kind of draw maybe like right around about right here. Most of these touches, crooked line and all, probably right around 550. And you're going to kind of see a little diagonal line of resistance. Now, so far, if we went down to the oscillator and said, what do you think? If I only said, look, only look at the bottom. If I said, look, you can't look at the top, you can only look at the bottom, what do you think the chart's going to look like if primarily we're spending it in trend 3, a little in 4, little bit, and when we actually do fall down, it goes back to 3 and snaps back up? What does it probably tell us? Without even looking at the chart, it's probably telling us that it's an upward trend, okay? Now, when we pull this back down, what I'm going to do is we're going to try to buy Caterpillar on a little bit of a dip in the price. Right click, okay? Buy custom with OCO bracket. Now, what I'm going to do is this is an option trade. Is that true? That's not true. Why is it? Well, because it says stock right there, okay? Plus, if we're buying on the chart, we never pulled up which option, expiration, strike, so on. We buy the shares of the stock, let's say 570, let's go to the current price, 574.27. The stop, we need to see where the support level is. Most of that support, if I were to kind of bring my line up a little bit, it's probably right about, let's say, 551-ish. If I took 551 less 2%, it'd be 539.98. 539.98. Okay? Dated GTC. Now, when we talk about position size-wise, they could probably do about 20 shares of stock here. That's it. Most of these positions, that's going to be about $10,000 worth of stock, maybe 15. That's going to be right around $11,000, $12,000 worth of stock. Now, when we talk about target area, okay, when we talk about target area, you're going to see that we have some old highs. Now, we have some old highs here, there, in here. We can kind of forecast that it might go up. Yeah. We could also use classic Fibonacci when we have a prior high, whenever we have a prior high. And whenever we fall back down to this area of Seaport, that 161 extension becomes an area for a target. We don't know if it's going to go up there. Or we could actually say, look, I'm going to try to go for the 200%, which is the channel width of the channel, added on top of the resistance. Now, this is not new. This is the same. We're doing the same thing over and over again. Now, here's the deal. This is not like, oh, today, we're just happened to like look at something that's trend 3 and trend 4. When we're talking about bullish investing, most of the bullish investing is coming trend 2, trend 3, trend 4. If someone is buying in trend 4, what are they thinking? They're thinking that it's going to break to the upside, okay? They're thinking it's going to break to the upside. Now, again, Ray mentioned, and he's been brave enough to tell us, I'm scared of resistance. Well, now here's the deal. As long as the market, some of those growth areas, okay, are still outperforming technology, discretionary, energies, materials, and so on, and communications, if those areas are still hot and the VIX is actually still kind of tapered down, you can see that continuation. The other thing I made mention of this on Friday, and I'll say it right here, you want the TNX to actually stay down. You do not want rates to go up, and you would like to see the DYX. You'd like to see the dollar index flat to down. You want these to be tailwinds for stocks, not headwinds for stocks, okay? Now, what I'm going to do is I'm going to put a target right there of 610 and 539.98, 20 shares, confirm and send. There's not a commission to buy the shares. It's really going to just be the capital outlay of the stock. All right. Now, so what I'm going to do is let's go back to just real quick another chart. Now, if I pulled up, let's say I was looking at, let's say I said, hey, I am looking on the Dow Jones and I would like to find a stock in trend 2 condition. Are there any? There are. Okay. Now, I want to say this right here. Is there any set length of time in which the stocks stay in certain types of trends? No. It's market dependent. Okay? It's market dependent. If the market is, or it's market dependent, yes, but also could be company dependent. If the market is very, 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 very bullish like it was in 2017 or 2022 and so on, could we be in an extended, prolonged period of time with trend 3? Yes. Okay. If we're in a bear market, the opposite would actually be the case where, man, we're spending a lot of time in trend 1, 2, 3. Can't fight it. We can't really stay a prolonged period of time in an upward trend, hence bearish trend. And where does that come from? The general market. Okay. Primarily, it can be stock specific as well. Now, if I said, you know what, James, I want to actually look for a stock in trend 3, not only on the daily chart, but also on the weekly. No, why do you say that? Well, because here's the deal. We could say I want a trend 2 condition, but if on the weekly chart it's in trend 1, well, it's kind of like short term it's up, but intermediate to longer term is down. Hey, I want to get into a stock, let's say Visa because, Microsoft, because it's trend 2 as well. But the problem is on the weekly chart it's trend 1. So remember, we're trying to get the intermediate long-term trend to be to our back or in our favor, and then look for that trend daily. So in other words, if I went up to a stock like Apple, if I pulled it up on the weekly chart, what do we got? Right here. Right here. Weekly trend 3. Now, does that guarantee it's going to go up? No. Okay. But it's at the current state. And then when you actually look on the daily chart, what do you actually notice? Trend 3 as well. Now, if I pull this up, if we're really in a decent little upward trend, we're probably going to be seeing some breakouts. Now, if you look at this, you're going to look at this, or by the way, it could have already broke out, and maybe it's trying to maybe bounce. Now, remember, I think one of the hardest things that I learned about investing is when the stock is in an upward trend, you can get these short, shallow pullbacks. What do I mean by that? Like this, like this. You're looking for a deeper pullback, but a lot of times it doesn't come. It pulls back for a day and then pops back up. Pulls down for 1 or 2 days, stays above the 10-period moving average, pops back right to the upside. And so those are all signs of bullish momentum. Well, what happens if it goes to the upside and you don't even get a red candle? Well, we've talked about that. If you run to the upside and you're not getting a red candle, that is your classic sign of momentum. Yeah, but I want it to pull back deeper. Do you think the market cares what we want? No, just say no, okay? Now, in this example, we're going to go 50 shares, right around that $10,000 mark, at the 280.80 price level. It's really about 280.90 now because it moved on us. And we're going to set the stop underneath. Now, could we say that there's maybe a little horizontal area of resistance right here and right here? Now, I only going to have time for the stop. I'm going to put the stop underneath that 274.35. Whoa, easy. Okay, there it is. Less 2%, 268.86. So we did 2 trades here today, okay? And we did Caterpillar, and the second example is Apple. Now, from today's class, I want you to go back and review this. I want this to be something that if I said to Josh, see ya, James, 561, can you teach us in a webcast about what I just taught you? Okay? Can you do it? Now, I want you to also reflect back. When did you tend to do the best in the market? What trend? Second, I want you to also be thinking about, let's say, how does this relate to psychology of investing and strategy? Okay? Now, if you kind of think about everything we do, it's really based upon these 5. Who created the 5? I did. Why did I create the 5? Because I got tired of, you have a million investors, you have a million different answers. And so when we talk about different types of trend, this was a way to categorize different types of trend based upon where the price was in relationship to moving averages. I'm out of my time here today. Cameron May will be coming up next. Want to thank Rachel in the chat. I will be in this week. I will not be out. I'm going to stay here throughout the month, even though the family's going on vacation. Me and Jax, we're going to hold the fort down. Now, the big actually thing is, also remember that this class has been recorded. So if you have not subscribed to the Trader Talks channel yet, click the subscribe button. If you enjoyed today's session, click that thumbs up so other people can actually find it on YouTube as well. And also learn investing faster, okay? And also remember with what we discussed, it was done for example, illustrative purposes only. And this has been the class on trading with technical indicators, seeing the bigger picture. Thanks so much. Stay tuned for Cameron May coming up next. Bye-bye.